Everyone's like, no, but the markets and Trump and tariffs and geopolitics and China and then Russia and that's all and what you've all done is price in maximum fucking fear. At every point, you've got, this is number of stocks with a 40 days RSI below 30. This was before the rally really started. One of the few ever, this is the same as we had at COVID when the world shut down. It's the same as the Russian default and the Asian crisis. People are crazy with fear. Investor intelligence survey, percentage bullish, all-time record lows. The least bullish people have ever been in history. And the forward-looking indicators tell you the economy is about to explode higher, and people are massive bearish. What was interesting is we just saw the charts coming out today was that retail investors had been buying the dip. Institutions still haven't. They're all massively underweight.
Let's address the elephant in the room, altcoin season. A lot of people think it's gone for good. But according to Raoul, that's a big mistake. Here's why. Altcoin season isn't some magical, random event. It's tied directly to the business cycle, the natural rhythm of economic growth, household income, and cash flow. When the economy is down and earnings are tight, people tend to hold back. But as the cycle turns and disposable income rises, that extra cash doesn't just sit still. It starts moving out along the risk curve, and that's when altcoins come alive. If you're serious about understanding crypto cycles and staying ahead of the curve, make sure you like this video, subscribe to the channel, and hit that bell icon so you never miss an update. We've got tons of content breaking down crypto trends, digital assets, and market psychology, and we'd love to hear your thoughts. Drop a comment below and let us know what you think. Your support helps boost the algorithm and keeps this community growing. Thanks for watching. Now let's dive in.
So the fabled altcoin season, everyone's like, it's never going to happen again. It's just a function of the business cycle. Why? Because household earnings are still subdued. Because the business cycle is subdued. Average businesses outside of technology have subdued earnings. The moment the business cycle picks up, everyone has spare cash. Cash gets recycled into assets. People move further out the risk curve. So altcoins are exactly the same as credit spreads, small caps, emerging markets, junk bonds, all of this. They're all exactly the same thing. The further out the risk curve, the business cycle actually drives all of it. It's also the same with fine wines. It's also the same with Rolex watches, all driven by the same thing. So we all want to see the ISM above 50. We've got the forward-looking data to say it's going to happen pretty soon, and that's going to be a very big signal to us. Usually that will happen as Bitcoin starts breaking all-time highs, which we imagine should happen pretty quickly, because that's every time that happens when we start to see these liquidity conditions. But the problem is nobody believes me.
That's true.
Everyone's like, no, but the markets and Trump and tariffs and geopolitics and China and then Russia and that's all and what you've all done is price in maximum fucking fear. At every point, you've got, this is number of stocks with a 40 days RSI below 30. This was before the rally really started. One of the few ever, this is the same as we had at COVID when the world shut down. It's the same as the Russian default and the Asian crisis. People are crazy with fear. Investor intelligence survey, percentage bullish, all-time record lows. The least bullish people have ever been in history. And the forward-looking indicators tell you the economy is about to explode higher, and people are massive bearish. What was interesting is we just saw the charts coming out today was that retail investors had been buying the dip. Institutions still haven't. They're all massively underweight. There's another chart, sentiment, bulls versus bears, bearishness, again, all-time record highs, only ever been exceeded a couple of times in history. Consumer expectations for declines in stocks near all-time record highs. The VIX index, the measure of fear or volatility in the index, in the top 3 spikes of all time. And again, using my DMARC indicators, it's generally a reversal pattern. So quickly to go through the charts, This is the most important chart for you to understand, is that corrections are normal. You've just gone through a normal correction and you've managed to lose your minds, which is hilarious because we've had 7 of these. And last time around, they were bigger. Back in 2017, 28%, 39%, 38%, 27%. Nobody remembers any of those. In fact, none of you remember any of these. Some of you remember this summer because it was pretty miserable. But that one, do you remember that? Or that one? No. But each time you convince yourself it's never going to happen, it's all over, we're never going to make money. And in 2017, you did the same, and it just kept going up. Remember, 23x in that whole moment of you going, oh, it's all over, we're never going to make money, and me selling out somewhere here, thinking, yeah, I'm really smart. No, I was a moron. So again, using DMARC indicators, these have worked stunningly well because Bitcoin's now up here. These 13s, cluster 13s, lows. We had them in Solana as well. This chart is hilariously out of date. This was the hourly chart of SUI. When I said, listen, if it breaks this inverse head and shoulders and the hourly should be up, well, now it's up somewhere above the top of this chart already. When I look at the chart pattern of SUI, it is a wedge pattern. Again, we're way up here. We're just short-term consolidating now. My guess goes to all-time highs pretty soon. It's a very bullish backdrop. Again, another hilariously out-of-date chart. I've been using the SUI versus Solana chart as my kind of compass of, what's the strongest performing horse in the race. And this is what made me allocate all of my money, essentially, to SUI. And it's now up here. So that's how fast things move. The weekly chart, you can see it was this breakout here that allowed me to think, okay, this is going to be a game for SUI to play that should outperform Solana, which is an amazing project with a fantastic community, great technology. This is the faster horse. So that's how I look at things. The other one was interesting. Again, another hilariously out-of-date chart is Deep. Deep exploded out of this. Deep is, if people don't realize, I just got it from the asset management firm that I run. Deep was the best performing crypto asset of the top 300 in the last month. And it's outperforming SUI too. I mean, this is amazing. Well, it makes sense, right? This is the liquidity layer. Of course it will. And it's earlier stage. And it's so highly correlated. So, the whole ecosystem is looking amazing. You've seen here, you've been here, you've seen everybody talk. You've heard from all the builders, you've heard from all of the co-founders, you've heard from everybody why people care about this. It's not about the charts. The charts just reflect everything that you guys are all doing here. And it's an incredible job. The excitement of what's happening here today and over the last few days, everybody should be proud of. Everybody should be proud of what's been built, and the vision that these guys are executing on is simply stunning, and the market is paying attention. This is hilariously out of date because it's up here now. So everything is broken out. Everything in the entire ecosystem is broken out. All of crypto is breaking out. Because of the energy and what's going on here, we happen to be the fastest horse right now. Is that a guarantee? No, it's not. But, I just follow the money. I follow the liquidity flows. I follow the charts. I try and make the best asset allocation decisions I can. And the best one I can think of is we're in the banana zone.
Raoul's no stranger to mistakes. He's been there too. He's sold too early, been shaken out by market noise. But every time, he comes back to the same foundation, the data, the macro signals, and his core thesis. Because all of this, it's just part of the cycle. Looking ahead, Raoul sees a powerful setup forming. He believes Bitcoin could accelerate rapidly once the ISM breaks above 50, and if it reaches 57, which his models say is very possible, we could be looking at Bitcoin hitting 450,000. Is that an exact prediction? No, but it's a data-driven estimate, rooted in macro trends and liquidity flows, not hype. Let's go back to the interview.
The other thing is, okay, well, with the dollar and the banking systems doing this, well, the other thing that's doing it is the central banks. China is starting to print money. China has, I think, by my measure, 3 to 4 trillion to print. But they need the weaker dollar. They need to agree the tariffs with the US. In exchange, the US will continue to weaken the dollar. They will allow the dollars into the Chinese system so they can refi all of the dollar debts. And A lot of China debts, all of the corporate debts are in dollars. So what happens is we're starting to break out, and that adds to this push of liquidity. So it's not just the weaker dollar itself, it's not just the banking system, but it's the central banks starting to pump liquidity into the system as well, because they've all got to roll the debt. And that's why it is so cyclical. Every time the total global liquidity index breaks out, again, the same thing with M2, the market goes higher. And the reason being is I talked about the correlation. Well, here's the chart. It's a 90% correlation with weekly global liquidity. That's Bitcoin. And the NASDAQ is a stunning 95%. And so it's hard to refute that this is not what is happening. It's so obvious, but most people want to refuse to believe it. They start mid-curving the whole thing, saying, well, that's not the printing of money, and this is not how it is. It's so clear in the data. It's so obvious that this has been going on. And even when you listen to Scott Bessent speak or Janet Yellen speak, they all talk about this. They talk it about in the terms of basically the everything code framework. Business cycle. Business cycle is currently weak. The business cycle is the most important cyclical factor. It drives, it's part of the global liquidity construct. So the business cycle actually came out today or yesterday at 48.7, slightly weaker as we've been expecting. Bitcoin's already priced it down to 47.4. So Bitcoin's already priced in the bad news. But the good news is financial conditions lead it by 9 months. It's a very useful tool. And it's telling us that we're going to see the business cycle pick up super strong. And this will keep going. I think we'll end up in the 60s. It also prices Bitcoin by doing this. And so when you look at Bitcoin itself, the moment the ISM, we've had this very low period of ISM, and that was driven by this very flat dollar and also by rates staying higher than normal. But as the ISM starts crossing 50, economic growth comes back, earnings come back, household earnings come back, stuff gets reinvested in markets. So at this point is when Bitcoin super accelerates. And that point lies ahead. We're about to see that point now. Now, I haven't shown it on this presentation, but we've also imputed how it reacts to ISM. And if we get to that 57 ISM, that puts Bitcoin at 450,000. Is it exact? Will it be exactly that? No. But all of the people who are saying it's going to 150, 250 are probably scarred from last cycle without looking at the forward-looking data. So it's incredibly positive for me.
So why are some people still calling for 150K or 250K Bitcoin? According to Raoul, it's because they're still scarred by the last cycle. They're stuck looking in the rearview mirror, not at the forward-looking indicators that actually drive markets. And that, he says, is a big mistake. He leaves us with a powerful reminder. This isn't just about charts or price targets. It's about what we're building, what we're funding, and the communities that are driving this revolution forward. The energy in crypto, it's back, and we're already entering the banana zone, Raoul's term for a phase of explosive, liquidity-fueled growth. If you're ready to ride that wave, make sure to like this video, subscribe to the channel, and hit the bell so you don't miss what's coming next.